Welcome, everybody, to the second episode of this podcast. Now, quickly, before we continue, I just want to do a mic check. Can you hear me? All right, check 1, 2, 3. Dude, so you can't hear me at all? Okay, so I just want to still do, I still want to do a quick mic check and see if you can hear me. And I'm not sure, I see my bar moving up and down, but I don't know. Just quickly before we start, I want to make sure. Okay. It seems that everything is working now, so apologies about the delay. I actually sent the wrong link to everyone. But yeah, we will just get started in a moment. Welcome, everybody, to episode 2 of our podcast / hangout show. I am really excited to have you here because today we're going to have a special program where I'm going to teach you about all the different business models that you can get into, you can acquire if that's what you're doing with buying and selling businesses. And I want to give you an overview about everything from e-commerce to SaaS businesses. It's all about website business models. And this is a part of the series that we're doing so that we can get you up and running with some basic knowledge about the entire industry regarding digital asset investing. Last week, we gave an introduction to the fundamentals, and this week we're going to dive deeper, going through some metrics, including some multiples. But the whole point is we're looking to basically create that passive income of between 30% to 50% investing in digital assets. That is my goal, the deals that I'm looking at. And those deals are through different mediums. So what did we cover last week? Just to do a quick recap regarding episode / lesson number 1. The first thing that I talked about is how we're planning on getting 30 to 100% return on investment with our digital asset investments. And that was really exciting because a lot of people just don't know about this entire world of digital asset investing because it's an alternative to everything out there, to the stock market, real estate, and those asset classes are extremely popular. But if you ask anyone around you, no one's ever heard about digital asset investing. And a lot of people just don't even know how people make money online with these different business models. And then when it gets to the point where they start considering actually buying something, well, that goes and flies completely over the head. So we talked about that. We talked about also the digital asset investment process, from how you source deals, from all of the brokers, all the way going through negotiations, doing some due diligence, and then submitting a letter of intent, closing the actual deal, and going into adding some operational value and holding on to that website or digital asset that you acquired. And lastly, we went over an overview of the industry statistics, how in 2014, 83.6 million worth of deals was closed. And that's just the deals that we know about. Now, outside of that, of course, the number is slightly bigger, but it's still minuscule compared to the multi-billion-dollar mergers, acquisitions, private equity deals that are happening outside of this space, which shows just how much enormous potential, especially with the internet being so vast, how much enormous potential there is in this. So if you missed it, go to digistrats.com/podcast, and you can catch our episodes there, including, depending on when you hear this, our future episodes as well. So before we continue, just quickly, if you're actually going into buying and selling websites, what I'd like you to also check out is digistrats.com/buy, where we have an application for our buyer community. And we have a small group, a small buyer community that we source basically proprietary deal flow to. So if that's something of interest to you, then you can apply to that. And then the other thing is digistrats.com/sell. If you want to apply, if you actually have a current business and you want us to give you a free valuation. With that being said, let's jump straight into these business models so you can get an overview and understand everything that there is when it comes to these different business models and how to take advantage of them. What are, number one, the opportunities, but more importantly, the risks? Because it's great to be able to make a lot of money, but we have to understand that when I'm going into different deals, for example, a deal that I'm looking at right now, if I'm going to put a couple $100,000 into something, well, that can disappear overnight. If it's something that's risky, that's dependent on AdSense or Google, I have to understand those risks, clarify them, because that income, that potential sum of money that I invest can disappear right away. So what are these 7 different models that people use when they're creating different businesses online? Well, number one is content and AdSense. And I group these together along with lead gen. And we'll get into that. We'll probably separate those out. But I group them together. Basically, these are sites that get traffic, and through that traffic, they monetize it. But they don't sell any products. They have basically outsiders monetizing that traffic. Number 2, e-commerce, Amazon, physical products, selling yoga mats, for example, on Amazon. Number 3, SaaS software. You're probably signed up to different softwares, whether it's an accounting software or something for Facebook retargeting, like Perfect Audience. These are all softwares, and there's a lot of them on a much smaller scale that are available for purchase. Number 4, membership subscription. Usually these are maybe either newsletters or something more along the lines of an info product, something that you pay for monthly to get access to some type of education. And lastly, there's the other category, marketplaces, things like Fiverr, once again on a smaller scale, maybe for employees or HR, or service businesses, which I'll get into, but I recommend that you actually stay away from. Quick also recap of what we covered last time, because this is very important moving forward, is what is that current state of the market? Now, we talked about how 75% of the buyers in this market are first-time buyers. That means that oftentimes they're not strategic buyers, meaning, for example, let's say if we look at a software business and maybe I already have a business that is an ad business. I basically provide some type of ad software to help people manage their AdWord campaigns, their Facebook campaigns, all types of YouTube campaigns. And I have this software, and then something comes on the market that is just about Facebook ads. It's a software to help people manage Facebook ads. Well, that would be a strategic acquisition for me. And if I took that person's customers, I could easily monetize them, because I know that all of his customers would die to also have access to my software, and I can connect with them. Now, if I see this ad software on the market and I've never even bought a software, I've never created one, that's not a strategic acquisition for me because I have no overlapping use when I'm acquiring. So it's very important to put that out there because showing also still the infancy of this market, and as it grows, I'm pretty sure, I'm pretty confident that it's gonna change and it's gonna become more of the strategic buyers and also financial buyers, private equity funds, or even investors that are repeat serial investors. 19% is the increase in SaaS software business valuations. So that's on an uptrend. People like SaaS. People like that there's an underlying asset that gives it a lot of value. 53% of all businesses sold are actually e-commerce. So when we go to get to that Amazon e-commerce part, it's going to be pretty major because that makes up 50% of all of these online digital assets that are being bought and sold. And the average valuation, the multiple, is 2.06, and this varies across sources. But basically, that means that, let's say the business has made $200,000 in profits over the past 12 months. Well, on average, that business would be listed for 412 and be sold for $412,000. Now, once again, this varies. I'm going to give you some numbers later on from a different source as well, and you can compare those to that. Because it really depends. Like I said, the data is pretty fragmented. There isn't that much data because there's only $83.6 million in transactions. Now, it might seem like a lot, but it's not. When you look at, for example, the two biggest beer companies that are about that are kind of doing a similar deal along these lines, that deal is valued at over $100 billion. $100 billion, just one deal. And that means that one deal is valued at over 1,000 times this entire market. So that kind of tells you a little bit about, like I said, the infancy of this market, and how there aren't that many deals. There aren't that many buyers or sellers within this market just yet. And at this current state, a lot of people are saying that actually the inventory, the good businesses for sale, there aren't that many out there. So that's kind of the current state. All right, let's now jump into the types of business models. And now, once again, the statistics aren't always accurate, but this is an overview. That data was based on 182 transactions that occurred in 2014. 53% were e-commerce transactions. 28% were SaaS softwares, but I also grouped apps like mobile apps into that. 8% were advertising content AdSense plays that we're going to talk about that I'm really excited. I'm looking a lot into those. Only 2% were lead gen plays and 9% were service plays, meaning, for example, an SEO agency that's working with clients. Now, my source for a lot of this data, pretty much all of it, other than a lot of the statistics were from BizBuySell that I just went over right now. But from here forward is going to be from Centurica. Now, you may have heard of them. Maybe you haven't. The owner right now is actually Justin Gilchrist. He's a very good guy. I've talked to him before, and a very down-to-earth guy. So he creates this entire report about the market every single year, and it's a very valuable resource that I highly recommend everyone checks out. And it's free on their website, which is Centurica.com. And I'll go over that a little bit towards the end because I want to end it off with an action item. But before we go into that, let's actually go into this. And I want to show you examples of these types of sites so you know what you can potentially acquire, what you can later sell. Now, before we go into that, I want you to think, what is the most applicable and targeted type of business model? Because when people start sourcing deals, and it even happens to me, I suddenly see an e-commerce Amazon deal and I start getting excited and I think, okay, one of my buddies, ex-Goldman Sachs guy, he can help me out with this deal and we can kind of somehow merge everything together. It's going to be a great deal. And it's not my type of deal. I don't know anything about e-commerce. I don't know anything about Amazon. That's not true. I actually know quite a bit. But I've never actually sold a physical product online. That might change next year. But up until this point, that's the current state of my experience with Amazon. So it's not a targeted offer. And unless maybe that guy that I'm talking about, one of my buddies, he brings a deal and he says, hey, Eric, I'm going to service everything. I just need to raise some capital. And in return, what I'm going to also show you is something. I'm going to show you how I grow this business, which is going to be very valuable for you because then you can also start investing in Amazon and e-commerce deals when I kind of give you that knowledge transfer if you participate in this deal for me. That's an interesting opportunity for me. But if I'm just either a passive investor or it's something that's not targeted, well, I'll probably pass on that. And it's very easy for me to start getting excited when I go through and I see all these brokers, I see all these deals, and I start doing the numbers, and it's really exciting. And then I have to kind of bring myself back down to earth and realize it's really important to go into something that I've either experience in or two, that I have a very, very concrete plan with how I'm going to execute. All right, so at a glance, what are the business models that are gaining traction? And why is this important? This is important because it's better to be investing in something that's becoming more valuable, buying something that's becoming more valuable. This is the way that I look at it. Then if I'm going to be buying something that's basically on a downtrend. And there are industry shifts, and I like to go with the trend when I can, or try to catch something when it's bottoming. Now, when I look at SaaS, meaning software businesses, and I see that they're just growing, I see lead gen and content businesses, their valuations, meaning the multiple that they're being listed at, that it's growing, I get really excited because I see, okay, let's say I buy a SaaS business, like this email marketing business that I was looking at. Well, maybe I'll buy it today at a 2x multiple. But if this trend continues, then in a year or two, I can maybe exit out of it at a 3x multiple because there's going to be this frenzy and people are just going to bid up the prices and it's going to become more valuable over time. Whereas if I buy a service business and I buy it at a 2x multiple, let's say I buy something for 400 grand, that's doing $200,000 in profits. Well, even if it just continues, in the next 2 years, 3 years, well, maybe I'm not going to be able to sell it for 400K anymore. I'll have to sell it then for 250, 300K because no one's going to want one. They're all going to want SaaS businesses. They're going to all want content, lead gen businesses. And I'm not going to be able to sell my service business. So it's important to understand these trends and how everything fits in. And I like to focus on those positive trends, meaning SaaS, lead gen, content are my plays and the ones that I'm going to be focusing on. And I'm going to avoid service businesses. Not only because of that, but as we'll get into it later, also because with service businesses, let's say I take over a digital marketing agency and I have to deal with clients. Well, I feel for the most part, the way that most of these sub $1 million deals or even sub $5 million deals are structured, even if the company that I'm going to be acquiring is going to be making $1 million a year or $500,000 a year, well, I'm probably acquiring a job and I'm probably going to have to deal with those clients. And I probably at that price point, I'm assuming that the owner probably didn't structure it where they're not involved at all. So I'm going to basically be acquiring a job as well, in addition to acquiring the business. So I have to be ready for that. And that's why I'm not excited about service businesses compared to something like SaaS, where I find it much more scalable. Same thing with lead gen and content. That's much more passive and hands off for me, even if potentially the return percentage wise on that investment for me is going to be lower. And e-commerce businesses, well, they can be dangerous if they depend on kind of an Amazon and on Amazon or a supplier. And that's the reason I think a lot of those are going down, especially the drop shipping ones, because the drop shipping ones, if you think about it, and drop shipping, basically you never own the product. You're not the one creating it. You find someone. It's kind of like it's a type of affiliate model. It's drop shipping, but the reason I think these are going down is because they don't really have any inherent value. You don't actually own a product. You're not building a brand. You don't have anything real. And if, let's say, that supplier who's giving you those products decides to terminate your relationship, well, you're done. Or if someone comes in and copies the exact model, well, they can go to that supplier and buy the same products you're buying. You have no differentiation. And that's why I think those are going down. And just e-commerce in general, a lot of these business models are dependent on Amazon. If it's a Shopify business, well, that changes things. But a lot of them are dependent on Amazon, and that poses a risk. One of my buddies, he had a $400,000 a month. Now, that wasn't profit, that was revenues. And the margins weren't particularly high, but still $400K a month is quite significant. Dollar business, and they shut him down. Amazon shut him down. He claims that it's because he was competing and he was encroaching on their turf, but no one will really know. Maybe he had some violations. Maybe he pushed it too far and he was breaking the rules, or maybe literally Amazon just didn't like him and they shut him down. No one really knows. No one will probably ever find that out, because once you get shut down, usually people don't talk to you after that to explain exactly why. So what about the average multiples by these primary business models? Well, the cool thing is this is all everything. It's a very similar analysis compared to what we did before, but these are the actual multiples, not just the percentage increase, but the actual multiples. And you'll see that content and media have a 2.91 average multiple. And once again, multiples, what I'm saying is, if this content and media business generated $100,000 in 1 year, 12 months, and it was listed at a 2.91 multiple, it would be listed for $291,000 by a certain broker. Now, from 2013, that was an increase, because in 2013, the multiple was just 2.69. Same thing, membership subscription businesses up from a 2.32 multiple in 2013 to 2.74. And e-commerce, those multiples are down from 2.83 to 2.48, and from 3 to 2.7, just e-commerce in general. So those multiples are going down, while content membership, SaaS multiples, now they stand in 2014 at 2.83, up from just 2.38 in 2013. Lead gen also up from 2.34 to 2.59, and service is down from a 3.11 multiple in 2013 to just 2.21. So the lowest multiples, things are being listed at the lowest multiples are those service businesses at around 2.21, and some of the e-commerce ones aren't doing too well, whereas content and software are doing really, really well. So SaaS, content, media, those types of businesses are considered to have the most value regarding their listings at the highest multiples. Now, this is the multiple that this business, let's say a software business, is listed at. So that doesn't mean it gets sold for that amount. The multiples that these get sold for. So be careful, because if you're using these numbers that I'm saying in order to make purchasing decisions on, let's say you see a digital asset, you say, oh, this is a great multiple because it's below what Eric said. Well, that's not necessarily true because these are listing multiples. And services have the lowest as they are usually unscalable for the most part. So that's why I believe those are coming in at the lowest multiple. Let's dive a little deeper now into these business models, these concrete specific business models, and we're going to go through 7 of them. I'll group content and lead gen together, which is what I'm going to talk about now. But let's dive deep into them. And number 1 is content and media. So let's just quickly cover what is content and media again. Well, content and media includes portals, directories, video sites, review sites, blogs, forums, and galleries. A lot of it are blogs. They're just simple blogs that have good SEO and that rank really good. They get a lot of traffic and people monetize them through AdSense. One of my favorite blogs that I want to talk about is this blog called DealBook, which is actually a blog about private equity. It's mergers and acquisitions on these billion-dollar deals. And it's by New York Times. So, they post basically every single day and they have a lot of content and people just visit over and over again. And what does that mean? Well, they also have then different types. They don't have that many, but you will find some type of ads on there as well. Now, with the New York Times, they're careful with the way they place their ads and everything like that. But on a smaller scale, these different blogs, you can find one maybe around fashion that's being sold for $1 million, and they get a lot of traffic, viral traffic from all their social media shares. And then people just come there and they make money because people click on their ads. And usually these ads, they can either be put there by Google, that's Google AdSense. If you set yourself up with a Google AdSense account, you choose where you want to put those ads, and then people just start putting them there, and other people start clicking them. And when people click them, then that blog makes money. Or there are a whole bunch of other ad networks that people can use instead of Google AdSense. So that's the main model. Now, the average net multiple that these sites, these digital assets were listed at is 2.91. We already talked about that. The median asking price, that means the middle, not the average, right? Because if you have a couple that are being sold for a couple $1 million, that would just push it up. So the median is more relevant, is $85,000, down from 2013, where it was 94, almost $95,000. And the median revenue slash net profit is 39, almost basically $40,000 is the revenue, and 38,000 is the profit. Now, what does that also tell you? That tells you that these types of business models have an enormously high profit margin. Because once again, usually the owner is the one supplying the content, and they just get clicks and they start making money from these blogs and these businesses that they're working with. So that's down as well from 2013, where the revenue, the median revenue was 45K and the median profit was 40K. Now, the important thing to point out here, what are the risks? And this is where it gets a little messy and where it's important to analyze things, and also the opportunities. The risks are that a lot of these businesses are Google traffic or AdSense dependent, meaning if Google has another penguin or panda, animals that we've learned to hate, even though usually they're pretty cute, but when Google when you hear that in combination with Google, that means that a lot of times your traffic just goes down the tube. So when is that a huge threat, especially if the blog has kind of a spike in traffic and you do some due diligence and you figure out that black hat SEO tactics were used? Which means that in the future, when Google changes its algorithm, that site will most likely be penalized. Now, if it's really good white hat content and it's strong content, well, the site can even go up in ranking. But the penalty is what we're really worried about. I wouldn't call it an opportunity if it's just white hat content. I still would look at the penalty. So people have to be careful, and it's something that we're always trying to mitigate, usually by putting different terms into there, such as an earn out over the next 18 months or something along those lines. Now, the opportunities, though, are the high margins, and that a lot of these sites are pretty passive. The model is pretty passive. It's also possible to change up these models. When there's a site, let's say maybe it's around, I just saw recently a site around kind of the offshore emergency niche. If anyone's ever read Neil Strauss's Emergency, cool book, I highly recommend it. I liked it. I found it enjoyable. Not that practical, but I like Neil Strauss as an author. And so basically, world's going to come to an end. This blog is frequented by people who think that, and they're looking to then buy products. Now, if that site is being monetized via AdSense, well, why not create kind of a survival course or create your own physical products that you can then launch on Amazon and sell to these people? You're going to make way more money with that type of model than just throwing AdSense ads all over the site. So that's always true. So that's a big opportunity. If, for example, someone has experience with e-commerce, well, find these targets, introducing some physical products into the mix, and just increasing those revenues, those profits, by restructuring it that way. The other opportunity is just email marketing, higher frequency of content as well. So when it comes to higher frequency of content, for example, I'm looking at a blog right now, and they post only once a week. Now, that's not saying that they don't know what they're doing. They're pretty good when it comes to SEO, but increasing that content to about twice a week, 3 times a week, 4 times, 5 times, 6 times, could potentially increase the traffic. I still have to do some further analysis and kind of test things out, but that is a potential opportunity. Also, email marketing. Same blog has about a list, let's say in the 10,000 email range, but they've never emailed their list. I think they've only actually emailed it, that's a lie, they've emailed it about twice or maybe 3 times with no offers or anything like that. Now, because the site's getting millions, literally more than 1 million visitors, millions of visitors every single month, well, and it doesn't have any pop-up or anything like that, capturing those email addresses, offering an opt-in bonus, that's again another opportunity. So if, for example, you're skilled email marketing ninja, that gives you a pretty good opportunity. So these are different things to think about, understanding the risks, but also understanding those opportunities depending on each person's strength. Lead generation. Now, lead generation is kind of similar, but what is the primary model? If you look at something like Lawyer Dallas, you can look it up in Yahoo, Google. For some reason, I right here on my website, Yahoo came up. But basically, findlaw.com is something that's going to pop up. And FindLaw doesn't actually have any lawyers. FindLaw is a site. It's a lead generation site that then when someone goes there and looks up and finds that lawyer in Dallas, and they click on that lawyer, they call that lawyer, they reach out to that lawyer, well, Find Law gets money per lead, pay per lead. And that entire website, their entire purpose is to generate leads for lawyers and make a lot of money doing it. That's a multiple, I think it's an 8-figure business. I'm not sure about the exact numbers, but it's a huge, massive business. Now, it's not, they don't put AdSense ads on their site. No, they actually sell those leads because those are highly targeted, qualified leads that are ready to get in touch with a lawyer. So the pay-per-lead monetization model, and it can even be through a call center. I met a few guys, I know a few guys that have call centers that they have these lead gen sites, and people then call them, they pre-qualify the leads, and then they send the leads on to insurance companies, to potential financial companies. And once again, they get paid for those leads, and they get paid a lot of money, sometimes even in the range, some of these lawyer leads, if you look on Google, they'll be in the range of $100 to $500 per click for keywords such as mesothelioma, which is unfortunately cancer caused by asbestos. But then why? Because then these lawyers get hired and they have these huge lawsuits which make them a lot of money, so they're willing to pay $500 per lead. So these leads are they're expensive, right? These can be good models. And the average net profit multiple for these, that it's being listed as 2.59, which is up from 2013's 2.34. Median asking price, $105,000, which is actually down. But this is often, sometimes it's also due to different, the data sample can be quite small, especially like we saw with lead gen, with only a couple percentage points of the entire pie. So median asking price for 2013 was supposedly 250K. Median net revenue / net profit, 127, and 58K is the net profit. 2013, it was 160K median revenue and 110K net profit. Now, a lot of these aren't just organic traffic, and that's why there's a much bigger discrepancy, but sometimes it's paid traffic. So they'll have Facebook campaigns, AdWord campaigns that are directing traffic there, and then they get that traffic at one price, are able to convert that lead and send it on, sell it at a much, much higher price. So the monetization model, sale of qualified leads, where unlike an affiliate site, there is some pre-qualification required with this model. Now the risks are, once again, Google traffic. Sometimes these sites can be dependent on Google traffic, or one client dependent. Let's say you're only funneling those leads to one client. Now that could be a risk, and that could also be an opportunity, because maybe that the previous owner never even tried to get another client, and that, hey, I'm a lead gen expert, and I'm just going to call up a few additional lawyers, and I know they might be willing to pay me 50% more for each of these leads. And also, once again, black hat SEO sites, if someone used black hat SEO to just quickly rank these lead gen sites, well, that involves a lot of risk. Opportunities, it's kind of passive once the system is in place. Oftentimes it is passive. Email marketing can be introduced if they're not using email marketing, to have a really aggressive follow-up sequence to actually convert that lead. Retargeting via Facebook ads, YouTube videos, and also if maybe they don't even have a blog, higher frequency content, more content, new content, in order to get more organic flow to that site. Now, why do I really like lead gen and these AdSense content sites? Because of that passive element. There is a lot of risk involved, but there is that passive element, which makes it much more suitable for me, because I'm just so busy with all my other other projects that I'm working on. Let's get into e-commerce. Average net multiple here, 2.7, with the median asking price $200K. Now, this is a little different because sometimes the inventory, it's a little, with these e-commerce businesses, sometimes you have inventory. And what that means is, well, do you include that in the price? Do you not? How does that work? So there is sometimes a discrepancy, but the median revenue is higher. It's more between the 182 to 288 mark. And once again, there are some discrepancies there. And same thing with the net profit between 70 and 93K. Now, the primary monetization is physical product sales. So if we think something along those lines of just even Amazon, right? You look at Amazon and you look at everything being sold. Sometimes it's sold by Amazon themselves. Sometimes it's not. Sometimes it's sold by random sellers that are just listing. They're importing from China or even importing just from other places in the US, and they're selling there. So that's one of the ways. Or it might be Shopify. Someone just creates their own website via Shopify or their own e-commerce site, and they start selling there. So the primary monetization model is physical products. The risks is that, once again, it's dependent on something. Oftentimes Amazon, sometimes it's a Shopify store, you have your own brand, but oftentimes these are dependent on Amazon. One supplier dependent. Sometimes there's a contract with the supplier. Sometimes there isn't even a unique product. That's a big problem with these. A lot of people think that they could do their drop shipping model, but it's quite risky because you're not actually building a real business that has any value. You don't have any, basically, you don't have any kind of value as that type of special business. So many buyers, rather than even just buying one of these businesses, they'd rather create their own product from scratch or copy it. I know one of my buddies, he's doing a lot on Amazon, but he doesn't want to buy a business because he says, look, I can rank any product on as first, basically, in that category if I just invest 10K. And I know that's a long-term investment. I can do that. So why would I buy something for a couple $100,000? But the opportunities are sometimes these people, they just rank on Amazon, but they aren't doing any of their other marketing, including email, video, social media. And if that's something that if you have an infrastructure of basically that can absorb new products, well, that provides an opportunity. So let's go into the second model. I'm not as excited about e-commerce, but I am excited about SaaS and software products. 2.83 multiple, up from 2.38 in 2013. Median asking price, 185K, up from 169K in 2013. Median revenue net profit, 93K, net profit 63K. From 2013, that's a little down. And how do SaaS, and SaaS stands for software as a service, which, once again, software products includes web apps, downloadable software products, gaming servers, VoIP, data services. They're monetized usually via recurring subscriptions. Someone pays $47 a month, $50 a month to access some type of software. Now, the biggest risk, and why right now I'm not focusing on SaaS, even though I've launched multiple SaaS products in the past, is because a lot of these businesses have the risk of the developer being the owner. And this, number one, is a huge risk, because if something goes wrong and you need to hire a new developer, well, it could be a nightmare. And that person doesn't know the code as well. Now, the owner is going to always, if there's a crisis, they're going to be able to go in, edit the code, do what they need to solve the problem. But if that owner is then gone because there was an acquisition that happened, well, that's a problem. And a lot of these businesses are also time intensive. The opportunities, you have a valuable asset. And that's the thing that I like the most is we talked about e-commerce. Sometimes with the drop shipping model, you don't have a valuable asset. With a software, you usually do. You have something unique. You can add upsells. A lot of times these business models include just one sale, and then there is no upsell. There is no optimized funnel. And the marketing is oftentimes weak with no email, social, video marketing, and sometimes not even content. So I see a huge opportunity here in this SaaS software space. Let's go quickly through a couple of these other models. Membership subscription, similar to SaaS, recurring income, but oftentimes it's training sites, communities, digital learning. One huge one is Lynda, right? Lynda is a huge place for that. And just before we actually go into that, an example of SaaS would be Shout'em, which is a mobile app creator. So if you want to kind of check out something, then you could look at something along these lines. Now, an example of a membership subscription site would be our Alchemist Layer, which is something we charge monthly for, and I give information and I give webinars on a weekly basis about some proprietary things that we're working on. Now, the net multiple went up from 2.32 to 2.74, with the median asking price going down from almost 300K to 217. Net profits went down slightly as well, with the revenues going up slightly. But once again, there might not be enough data for that. But the important part is, what are the different risks and opportunities? Well, the risks are similar to software, except it's not as big of a risk because code is harder to kind of dive into than actual content. But what about if the content creator is the owner? It would be very difficult unless I change it up and unless I basically train someone for my team, which I might do in order to give the webinars for the Alchemist Layer, for me to exit out of it. If I'm just giving the webinars and I want to sell it to someone, well, it's going to be really, really tough, especially if I do live webinars every week. And that's the biggest selling point. And time intensive. You got to keep on creating new content and you have to stay up to date. But there are opportunities. A lot of times these funnels are not optimized. You can introduce upsells, email, social, video marketing, and content, and drive the sales of these memberships, especially if it's some membership that people are just going crazy over. It's viral, people love it, and it's not just a fad that happened, that just happened. Now, the next two business models are in the other category. I don't really consider these that much because they're not right for me. They might be right for you, but they're not right for me. And these are marketplaces and transactional types of businesses. Something, for example, like Fiverr. If you look at Fiverr, that's a marketplace. They charge $1 for every $5 transaction. They take $1. And how do they make money? It's just a volume of transactions. Upwork is another example, but they could even be dating sites, something like Match.com, job sites, even the real estate listing services, payment processors, auction sites. Now, it's a transactional monetization model. So whenever a transaction happens, they basically take a cut. Now, the main risk is achieving critical mass. So if you buy something and it's kind of making a little bit of money, but you want to grow it, well, it's kind of like Facebook, right? Let's say Facebook had 10 users. Well, it would be worthless. These sites need to reach critical mass because of both people doing both the selling on those transactional sites and people both doing the buying. And if you don't have sellers, you don't have buyers. And if you don't have buyers, you don't have sellers. So if it doesn't reach that critical mass, that can expose it to a lot of risk. And the opportunities, though, it's a valuable asset. And if you could really hit that critical mass, well, you could potentially have later on a Silicon Valley type of exit at an enormous multiple. It could go viral and people get really excited about it. And sometimes the marketing of these sites is pretty weak. So you could restructure that as well, like we were talking about with some of these other opportunities. Now, service-based businesses I recommend staying away from. Service-based, once again, it's like getting a job. And you see that with the multiple from 3.11 down to 2.21, and it's a huge, huge drop. Same thing with the median asking price from 485 to 149. And it's a problem. Selling services, if you look at, for example, a digital marketing agency, that's a good one. You look them up on, and you'll see a ton of them. And it's great, but it oftentimes, unless you have a team, it requires you to be involved. And even if you have a team, you have to manage that team. Compared to some of these AdSense sites, it's a one-man operation. I saw one generating $30,000, $40,000 a month, one-man operation, right? Passive. Compared to doing that same volume, you might need a team of 10 people in the Philippines for a service business like this. So it's a client monetization model. The risk is oftentimes unscalable, acquiring a job rather than a business, but the opportunity is a strategic purchase. So for example, if this is something you're already involved in, to get that client base, especially if you can do it for a low multiple, it might be really, really worth it for you. So if it's strategic, then I do recommend looking at these. Otherwise, I would recommend avoiding them. So that wraps it up for an overview of these different business models and some examples how those work. Now, with this overview, we're going to go into a couple additional opportunities next week. But the homework before that happens is I highly recommend you go to Centurica.com, CENTURICA.com, and getting that report. I know these guys, they're not going to spam you or anything like that, but you do get a report that I think is highly valuable. It's 43 pages long, gives you huge insights. Now, we're compiling data and we're probably going to come out with our own report, but until that happens, I highly recommend this report. And next time, we're going to dive into my investment criteria that I have established based off these different business models that's going to help me get consistent gains over the next couple of years. A different fund and co-investment options that I've been looking at personally, and how I consider those when someone comes to me and tells me about it. And then some of the content AdSense plays, I want to do probably some type of case study so that we can dive a little deeper into that and why I consider that for myself to be an opportunity, so you also stay current with the different deal flow that I'm looking at, because I think those are the best experiences that you can learn from, is my experiences as I'm kind of live looking at these deals as they come through, and then give you the results of my different acquisitions and sales over the next few months as well. So then the next basically time that we'll meet is at the exact same time. We're going to be doing this regularly, but the cool thing is I want to show you that I'm actually in the trenches. And I really am. And actually within the next couple of minutes, in the next 3 minutes, once I wrap this up, I have to jump on literally a call. It's a due diligence call, and I might be putting in an offer for a business later today in a couple hours. So it's going to be a content AdSense play, and it's really exciting. I love it, but I want to just make sure that you also stay current with some of the deals that, like I said, we're working on, and that we're in the trenches practicing this every single day. So let's wrap it up with just once again the different things that we offer on behalf of DigiStrats. If you want to go to DigiStratscom/buy to apply for our buyer community, or DigiStratscom/sell if you actually have a potential business to sell, then I highly recommend that. And if you have a successful application, then we'll probably see each other on a call. With that being said, I want to thank you for listening and for attending. I hope you gained a lot of value out of this session, and we're going to continue through these introductory modules before jumping on a few interview calls, bring in some additional brokers, professional investors, so you can get different viewpoints other than mine, and it's going to be an exciting journey. Thanks for listening, and I'll catch you next week.